Talking to your kids about money can be tough enough, but investing, that can feel like trying to teach them a whole other language. The good news is, it really doesn't have to be that complicated. Today, we're going to break down how to turn investing into a fun and totally understandable adventure for your kids.
All right, so let's jump right into the big question, the one that's on every parent's mind. What's the magic age? When is the right time to start talking about stocks and bonds?
Well, the answer is actually way simpler than you might think. The best time to start is right now. Seriously. And you absolutely don't need to be a Wall Street wizard to do it. We're going to show you exactly how.
Look, starting early isn't about trying to raise the next Warren Buffett. It's about making the world of finance feel less intimidating. By introducing these ideas now, in a simple way, you're giving them a huge head start for when they actually have to make these big decisions for themselves. So before you even think about diving into the stock market, there's a really simple first step you can take. It's pretty much the perfect on-ramp to the whole world of investing.
It all starts with a good old-fashioned savings account. This is the perfect tool to introduce the absolute core concept of personal finance, the idea that your money can actually work for you by earning interest.
And a savings account is so much more than just a digital piggy bank for their birthday money. It's a hands-on lesson in everything from keeping money safe to building that crucial habit of saving for the future.
Okay, so we've got the saving part down. Now let's step it up a notch and move on to investing. We'll start with the two big ones you always hear about, stocks and bonds.
This slide breaks it down perfectly. A stock, that means you own a tiny little piece of a company. You're an owner. And because you're an owner, there's higher risk, but also the potential for a much higher return. A bond, on the other hand, is basically a loan you give to a company or a government. It's way lower risk, which means you usually get a more predictable but smaller return.
Now, this is probably the most important part to explain. Investing is not like a savings account. A stock's value is not a one-way street. It can go up, which is awesome, but it can also go down. And that's a really key lesson in managing expectations and understanding risk.
So, how on earth do you make concepts like risk and return sound even remotely interesting to a child? Well, the secret is to connect it to their world.
Instead of talking about abstract market theories, talk about the companies your kids are already obsessed with. Disney, Nike, Apple. You can even make it a fun activity. Explore their websites together, look up some fun facts. Then ask them a really simple question. If you could own a tiny piece of one of these companies, which one would it be?
Okay, so once they've picked their favorite company, it's time for the really fun part, showing them how investing works in the real world.
And here's the best part. You don't have to risk a single penny of real money to teach these incredibly valuable lessons. There are plenty of safe, easy ways for your kids to get some real hands-on experience.
You've got a few great options. You could open what's called a custodial account and maybe buy just a few shares for real. Or you could create a pretend portfolio right on a piece of paper. A free online stock market simulator is another fantastic option. All of these let your child experience the ups and downs of the market in a totally safe and controlled way.
As your child starts picking stocks, even if it's just in a simulation, you can introduce one of the most important rules in all of investing, diversification. It's that classic idea that even young kids can totally get. Don't put all your eggs in one basket. A super simple way to think about it is to split their money into 3 equal piles. One part for stocks, one part for safer things like bonds, and one part that just stays in savings. Why do this? It helps manage risk, because when one investment is having a bad day, another one might be doing just fine, and it all helps to balance things out.
All right, let's connect all these dots to the real world and see how this can grow from a fun game into a real lifelong lesson. This is where the learning really starts to stick. You can start connecting their favorite video games, movies, or gadgets to what's actually happening in the business world. It shows them that these companies they love are part of a much bigger story.
Asking little questions like this is a great way to get them thinking critically. For example, you could say, "Hey, I saw in the news that fewer Xboxes were sold last quarter, but Microsoft's stock price actually went up. How is that possible?" Maybe their cloud computing business had an amazing quarter. It teaches them to look beyond just the headlines.
See, the whole point is to get them to think like an investor, to help them understand that a company is way more than just one product and that a stock's price is moved by all sorts of different things. Really, the purpose of this whole exercise isn't to make a quick buck. It's to help them get comfortable and familiar with how investing works. And a huge part of that is learning that every single investment has advantages and disadvantages. At the end of the day, it doesn't matter how much their practice portfolio makes or loses. What is truly invaluable is the experience itself, the confidence they build, and the financial literacy they gain along the way. That is the real return on investment here.
So we'll leave you with that thought. What's the very first company your child would choose to own a piece of? Ask them tonight. Their answer might just be the beginning of a fantastic, lifelong investing journey.